Hello, good evening. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. With me, Suyash Maheshwari here in the News 9 studio. Hi, good evening, Suyash. Not a very great day for markets yet again. A bloodbath of sorts that we're witnessing. Percentage and a half down yesterday, almost 0.8% down today. It's a hard time for a lot of retail investors.
That's right, Shweta. It has been rough for retail investors for a while. In fact, Nifty is on a 5-day losing streak. Now, the market opened on a positive note today. But, by mid-morning, selling pressure once again took over control of the streets. And once the Nifty and Sensex both slipped below that flat line, selling intensified and it took Nifty to a low of 19,074. Now, the index did manage to recover some of its losses in the afternoon session and climbed above the 19,100 level, with the last tick for Nifty coming in at 19,122 mark. Now, the broader market, Shweta, saw a good bit of recovery in the second half. They opened lower than the headliners at in the first half. However, by afternoon trade, we witnessed some sort of a buying action in mid caps and small caps, and as a result, Nifty mid cap 100 was down about 0.65% below the 39,000 levels, and the Nifty small cap 100 was down 0.24% at 12,433 mark. We also saw a spike in volatility today. India VIX jumped by 3.7% and ended today's session at 11.31 levels. Now, as I said, with today's fall, Nifty is now on a 5-day losing streak. In the same time, Shweta, Nifty has corrected by about 3.5%. Nifty mid cap, on the other hand, has corrected by about 5%. And I'm looking at the Nifty small cap 100, which, by the way, had hit an all-time high levels on October 18th, the day when the market crash started. It also is down about 5% in the last 5 sessions or so. Now, what led to today's fall? There are 3 factors.
Yes.
First, it's the global markets. Now, US stocks ended on a positive note in yesterday's session. However, futures today, the Nasdaq futures today were trading under pressure, and it indicates a muted start for the US markets. Now, this is on the back of muted earnings from Google's parent Alphabet as well as Microsoft. Now, as the last time I checked, contracts on Nasdaq sink as much as 0.8%. Whereas future contracts of S&P 500 were down about 0.5%. Another factor was a little bit of a bounce back in 10-year US yields. The last time we were talking about US yields, they had touched that 5% mark. But over the last 2 days, we saw some bit of a dip, whereas US 10-year bond yields had settled at around 4.8 levels. But today we saw a bit of a jump by about 6 basis points, and that is also creating fears in the market. Another factor is the crash that we are witnessing in the financial and the IT pack. Now, financials and IT constitute about half of Nifty's entire weightage. So, a drag on them is a drag on the entire market.
Absolutely.
So, that led to a good bit of a fall across the markets. Now, if you ask about sectors, as I said, financials and the IT were the worst performers. Nifty Bank was down about 0.74% in today's trade. Nifty Financial Services was down about 0.93%. Nifty Private Bank was down almost 1%. But PSU Bank, Shweta, outperformed the market and ended in the green, up about 0.17%. Another gainer in today's session was the Nifty Metal Pack. Apart from PSU Bank, it was a sole gainer. The Nifty Metal Pack, which was up about 0.5% to 1% throughout the day, settled around 0.15% higher. Now, what led to the surge in metal stocks? It was reports from China that suggest, perhaps a stimulus package could be in the pipeline. Now, according to reports, China is planning to issue a 1 trillion yuan in government bonds to support economy, with a focus on infrastructure as well as disaster relief. Now, China, as we know, is one of the biggest consumers of metal around the world. So, once a demand picks up there,
the demand for metal is likely to pick up.
So, that's why we are seeing a good bit of a run up over there.
And what's happening here with PSU banks? Why is it an outlier today?
I think it's a bit of a catch-up rally, because we have seen PSU banks turn into underperformers in the last couple of weeks. But the results also, Shweta, they are coming out well. Banks have shown resilience. NIMs, which were expected to contract, have not contracted as much for these smaller PSU banks. Also, what's helping them is the growth in deposits. they are now competing with private banks for deposit growth, which is, giving a boost to their earnings.
All right, so the results have augured well for PSU banks. Amit Gupta of Fintrekk Capital joining us on the show at this point. Mr. Gupta, thank you so much for taking time out, sir. It's a difficult day as we started for a lot of people as bears are tightening their grip on Indian markets. What is dragging down Indian markets in your assessment? Is it just a rub-off impact of what's happening globally? Are the macros still looking healthy and strong?
Hi, good evening, Shweta and Suyesh. So I think in general, there have been a lot of bad news which was there in the market for the past couple of months. It's just that market was surviving that barrage of bad news and stayed calm in that sort of period where the volatility was there, but it was sort of on the lower side. So some of the events, which has been, according to me, negative to the markets, the indices haven't really sort of reacted to them sufficiently. So whether it is hawkish commentary coming from the central bankers, including the RBI and the Fed, or whether it is downgrade of the global growth estimates, or even the Q2 earnings and the poor growth guidance by the IT services company. Now we had this hostility between Israel and Palestine. Then you have the rise in the global crude prices. There are opinion polls which says that the incumbent government could actually lose some of the states in the forthcoming elections. I think a lot of the news was sort of holding up the markets. But now, when we have seen sort of a breakdown on the indices, technical breakdowns, we are seeing the selling actually getting accelerated in the market. So my sense is this may just continue for some more time till the bond yields are, up, both in the US and in India. We have performed in line with the global market so far, but that could change
So
going
would it
forward.
be right to say, Mr. Gupta, that apart from FII sell-offs, DIIs are also selling off? The retail investors are wary, are jittery at the moment, and do they have a cause to be jittery at the moment?
No, I don't think, we have got to the point where retailers started getting jittery. They may not add to the, their current position, but I don't think there is a sort of a redemption kind of a scenario as far as such. We have seen in the past also that, the first 5% sort of a fall, nobody really exits. It's only when the fall accelerates to 10% to 15%, then we start seeing them pulling off the money. I don't think we have got to that point, apart from the FIs and the DIs, which have been actually on Monday, the data was actually positive for both FIs and DIs. Today we'll see, how is the data. But we also have to understand that there is a lot of money now outside the FI and the DI data also. We have a 10 lakh crore PMS industry now. The AIF industry is about 3-4 lakh crores. Then there is a lot of retail participation without mutual funds also. There is a direct investing which is happening from the retail side. So my sense is there has been some cautiousness there in those segments, and they have been sort of booking profits or at least trailing their positions with stop loss. And with the technical breakdowns, now that selling has been accelerated. I don't think that the mutual fund redemptions are at a place in the current market, but if the market fall further, then we might see even selling happening there as well.
All right, and what are the near-term support levels for Nifty now that it's hovering near the 19,000, almost 19,100 mark, come to think of it?
Yeah, my sense is that markets are weakened on the daily and weekly time frames. We are seeing sell signals almost all the momentum indicators for the key indices. So I think the 20-week or 21-week moving average, which is about closer to 18,900, 950, that should be the first support. And we'll see, how that how markets hold up at that support level. If that goes away, then we are looking at another 5 to 7% fall, which can take us deeply into 18,200 kind of levels. But the first support should be around 18,950.
All right, 18,950. Suyash, that is the near-term support level for Nifty at this point. That is what Amit is saying. Amit, stay with us. We continue to track, the macro developments here very, very closely. Tech Mahindra has come out with its Q2 FY24 results. How are the results looking like?
Shweta, the numbers are not looking that good for Tech Mahindra. I think it has missed estimates on both profitability as well as revenue front. Now, revenue on a quarter-on-quarter basis grew about 2.2%, about 2.2 to 2.4%. It came in at around 12,864 crores in the quarter gone by, whereas in Q1 of FY24, it stood at 13,159. Now, we had expected, revenue to come in at around 13,113 crore rupees. So it's about a 2% miss from our estimates. Profit, on the other hand, dropped by about almost 29%, Shweta. It came in at 494 crores versus, our expectations of about, 693 crores. We had expected, profit to stay flat on a quarter-on-quarter basis. Now, margins also came under pressure. We had expected a decline of about 100 to 150 basis points. Margins, EBIT margins for Tech Mahindra stood at about 4.7% in the September quarter versus 6.8% in the in Q1 of FY24. So overall, Shweta, the numbers are not looking that great for Tech Mahindra. Of course, we'll be keeping a track of what the management has to say about that, 210 basis points margin miss and a profit decline of nearly 29%. But I'm also looking at the stock, Shweta. Tech Mahindra, in the last 1 month has corrected by about 12% or so. In fact, even today, ahead of the results, the stock was down about 1.4%.
Okay, so maybe the subdued results were in line with expectation, but to what extent? Let's get Amit on that. Amit, I think the street was expecting subdued results, and that is the commentary coming in from overall IT sector for that point. Are these results in line with expectations or even lower than the lower expectations the street had?
No, I think, all the IT services company, whether versus TCS, HCL, Wipro, which have already declared results, except the order books of all these IT services company, on all other parameters, none have been, very good. And I think Tech Mahindra result is in sort of line with that kind of expectations. Already it was lowered, so it is, in line with the lower expectation, except on 1 or 2 parameters. But obviously the numbers are disappointing, and the growth may not come as fast as people would like to have. Also, Tech Mahindra is undergoing a transformation. They were very high on the main growth. Probably there is a shift in the management currently. So there could be a shift from that high ML growth, which has been margin dilutive in the recent past. So that would again mean that we will see numbers in the future as well, subpar, or the growth will be a little subpar. So I don't think we'll see an outperformance on Tech Mahindra in the next 3 to 6 months as compared to the, let's say, Nifty IT index. So one need to watch out for what is their future plan of action, given that they have a new CEO.
Right, so new CEO, management commentary would be keenly eyed on. What is the future course of action? Tech Mahindra just reflecting on the sentiments that the IT pack has been reflecting on. Many calling it a washout here. From the numbers trickling in, it just might be a washout here.
That's what I was getting to, Shweta. In fact, if you look at results of now, all, I think 5 or 6 top companies have reported their results. We have seen one trend. Revenue has fallen, except for Tech Mahindra. Profitability has improved because company has improved operational efficiencies. But now what we are seeing is that guidance coming from the management. So far, we don't have the guidance from Tech Mahindra management, but the guidance coming from other companies, such as your HCL Tech, such as your Infosys, is that there will be weakness for the next couple of quarters. And in fact, even the deals that they have won, these are longer duration contracts, and it will take some time for these deal wins to convert into actual revenue for the company. So perhaps it looks like FY24 is indeed going to be a difficult year for Indian IT companies.
All right, and Amit, before we move on, majority of bellwether IT companies have already declared their results. Tech Mahindra and a couple of others have also come out with their results. I'm not sure how many companies we're still waiting results for, but so far the trend line is emerging clearly, which is revenue has taken a hit in the second quarter of this financial year. Are you seeing trend to continue for onto other quarters as well? Where does it end?
And what's your broad outlook on FY24? I mean, it looks like a difficult year for the IT companies.
Yeah, I think the commentary which came out last quarter itself, Q1, the Q1 results came out, it was quite clear that it's going to be a tough year. Some sort of wanted to give a little bit of benefit of doubt because in Q1 there was a lot of impact about these small banks which have gone bust in US. But as we have moved forward 3 months now, the financial conditions in US is quite deteriorating quite fast. So even if we evaluate the present conditions in the US market, then so a sharp correction is expected in a lot of asset prices. Apart from that, even the China, I mean, even the European markets look quite jittery. So under that circumstances, the growth in the IT services company looks a little difficult to come by, at least in FY24. So if one has to take a call for investing into the IT companies, it has to be from FY25 and 26 perspective. Also, it is very clear from their jobs pattern that they are not looking to aggressively ramp up their operations. There is going to be 2 lakh less people employed in the current financial year.
Right.
Many of these IT services company haven't really gone into the campus placements as well. So that sort of gives you an indication that there is work currently, but they are not expecting acceleration or ramp up in those projects in the near term. So they have postponed.
Amit, while we speak, Axis Bank has also come out with its Q2 earnings. Let's get in Suyash to quickly run us through the numbers.
Shweta, Axis Bank has posted a good set of numbers. Both profit figures and NII has meet the street expectations. Profit figure stood at about 5,863.6 crores versus 5,329 crores in the year ago period. So it's about a 10% jump. We had expected a figure of 5,733 crores. So from our estimates, profit figure is up about 2.3%.
Okay.
Now net interest income surged to 12,315 crores versus 10,360 crores in the year gone by. So that's about a 18.9% jump on a year-on-year basis. We had expected NII to come in at 11,957 crores. So about a 3%, about 3% higher than what we had expected. And I'm looking at the stock of Axis Bank as well. The Axis Bank stock was doing all right in the morning trade. However, it closed down about 0.77%. Amid bearish trend that prevailed in the banking and the financial pack. Axis Bank actually ended about it slightly underperformed the Nifty banking pack. Nifty bank was down about 0.74%, whereas Axis Bank ended today's session down about 0.77%.
All right, those of course are numbers on your screen at this point in time. Axis Bank Q2 earnings are out. Amit, are these numbers in line with the expectations?
Actually, the numbers are slightly better than expectations, driven by the net interest income growth or even the NIM expansion, higher, etc. Obviously that's a testament to a very strong performance. There is a healthy loan growth as well, as I can see it. They are expanding the lending portfolio and sort of servicing other sectors also very efficiently. The deposits have increased, the credit costs have sort of seen a reduction, but the asset quality has improved in the terms of NPAs, the gross NPAs and the net NPAs both. So I think overall, given the liquidity buffers they've declared and the digital partnerships, the numbers seems to be a slightly ahead of the expectations.
All right, Axis Bank numbers slightly ahead of expectations. Perhaps stock impact will only be visible tomorrow. We will keep a close watch on that. But let's also quickly take a look at some of the top gainers and losers stock in action this afternoon.
Yes, Shweta. So among the gainers in blue chip stocks was Coal India. It ended about 1.08% higher, ended its 4-day losing streak. Metal stocks also, two of the metal stocks featured in the list of Nifty gainers, Tata Steel and Hindalco, ended about 1.08% and 0.83% higher. Now, as we know, this is on the back of that talks of a stimulus package back in China. Tata Consumers ended about 0.67% higher, and SBI also ended today's session in the green, up about 0.66%. Now, among losers, Shweta, the top loser in today's trade was Apollo Hospitals. Apollo Hospitals was down by about 2.4% in today's trade. Another stock which was down and featured in the list of top Nifty losers was Adani Enterprises. The stock is on a 8-day losing streak, and in fact it was down about 2% today, and with that, in the last 8 days, it has wiped off 10% of investors' wealth in the share. SBI Life was another loser. It dropped about 2.05%. Cipla, another pharma stock to feature in the list of top losers, was down about 1.9%. And Eicher Motors dropped about 1.74%.
All right. And before we move on, Adani stocks were in news this afternoon.
Yes, Shweta. So, I mean, looking back on January 24th, when Hindenburg came out with its damning report, one of the things that the short seller said is that, Adani group of stocks, the 10 listed entities, are overpriced, and they are overpriced by as much as 85%. So, essentially, Hindenburg said that they expect the stock to correct by about 85%.
Which is what has happened
over the next year or so. I mean, it has happened partially because
partially
Adani
a result of maybe the report itself.
Yeah, I mean, Adani Total Gas is the first to hit that target price, which Hindenburg had laid out for us. The stock is down about 85.27%. Now, these are from January 24th to October 23. These levels, the stock dropped by about 85%. Other major losers, Shweta, as you can see on the screen, are Adani Green. It's down about by 54%. Adani Energy down by about 68%, so it's getting there. NDTV is down about 30%. Adani Enterprises almost down 33%, and as I said, about 8 to 10% of that fall has come in the last 10 days. There are only two stocks that have since gained, after the Hindenburg report came out, only two stocks have outperformed, namely Adani Power, which is up about 15% in the 9 months or so, and Adani Ports, which is up about 1.4%.
All right, those of course are Adani Group stocks of all 10 listed entities of Adani Group, many of them down by as much as 50%. At least 4 stocks that I can see on my screen at this point are down over 40%. That is on the backdrop of a damning Hindenburg report, from which Adani has not been given a clean sheet by SEBI just as yet. So an important report there awaited as far as SEBI is concerned. I think we'll have to end it at that. Amit, thank you very much for taking time out. Thank you for joining us here on Newsline. Always a pleasure, sir, speaking to you.
Thank you for having me.
Shifting focus now, e-gaming companies have had a hard time recently. India's GST officials so far have served notices worth 1 lakh crore to online gaming companies. Remember, in August this year, GST authority imposed a 28% tax on online gaming companies on the total funds deposited to play online games as well as in casinos. Now, while the authority has denied any retrospective implementation, all major gaming companies have been served with GST notices. Last week, Delta Corp received a GST notice for shortfall of tax payment to the tune of 6,384 crore rupees, taking the overall tax demand on the company to 23,000 crore rupees. Gamescraft, another gaming company, received a show cause notice in September alleging GST evasion of 21,000 crore rupees. Fantasy sport platform Dream 11 has also been slapped with 25,000 crore rupee tax notice. What exactly is happening with online gaming platforms? Will they be able to survive the onslaught of GST notices? To talk about that, joining us is Abhishek Murali. He is the president, All India Taxpayers Association. Abhishek, thank you very much for taking time out. Thank you for joining us back here. What's happening with these gaming companies? 1 lakh crore worth of tax notices. I mean, many of us were discussing, is that even the total market cap of online gaming industry?
No, it's definitely not. I think it's a very, very steep notice that has been levied, and there's a bit of technicality when they're discussing this. The government wants to say that it's not retrospective, it's clarificatory. But really speaking, if you come to the ground level, I think anybody who is dealing in this will tell you it's in the effect of retrospective, because they're levying a tax on incomes or on receipts, which is more than 3 months old when making that clarification today. If I was a business and I knew it was going to be taxed at 28%, I may have decided to wrap up my business. Why will I do business if I know the rate is going to be 10% more and I'll have to bear it? I can't go and collect it from the people who paid me 6 months back, 3 months back, etc. So it seems a little unfair. It's definitely a little high pitch. And without doubt, this is going to go all the way to the Supreme Court. And I have a feeling that it will be given in the favor of the companies.
Hi Abhishek, Suyash here. I mean, the figure looks like very intimidating. 1 lakh crore of GST tax notices. I just want to ask, how likely are these companies? How likely is it for these companies that they will have to actually pay these tax?
I'll tell you where the conversation stems from. There is an interesting discussion we had in the newsroom that if these companies are unable to pay up, then what is the way forward? And will they have to pay up, or will perhaps the litigation go on and on and on for years and years like it happens in this country? So will that happen, or will they have to first wind up their businesses? Which of the two likelihoods will prevail over the other?
It's definitely going to go to the courts. There's no doubt about it. Because if you see the GST law today, traditionally speaking, the moment I give you a notice saying you have to pay this tax, you need to pay it within 30 days. If you don't do that, I will levy 100% penalty on you. So if it's going to be 1,000 crores demanded on you, you'll have to pay another 1,000 crores as a penalty, which just seems, like a business would just go under. So there is going to be a situation where people will immediately go to courts. They will go for what they call a stay petition. They will say, we cannot afford this. It's too much. It has been given retrospectively. It's not practically possible. So if companies can afford to go for this litigation, they will. But there's bound to be a situation where there are a lot of companies who simply cannot afford even the lawyer fees. They cannot afford even the lawyer fees. Those companies are likely to go under. I think this is something that requires immediate attention from the top people in the government, and they need to address this immediately because it's going to hit the gaming sector. Traditionally speaking, this 28% tax is reserved as a sin tax. It is meant for gambling, it is meant for horse racing, it is meant for betting, etc. But when you put online gaming in this together, what we call games of skill also gets included. Let's say somebody is playing a football game like a FIFA, or somebody is playing e-gaming tournaments, Call of Duty, etc. Like some of the video clips that you're showing side by side, you can see that people are playing games of skill and not a game of chance. And in that case, to put that along with a person who's betting money on horse racing seems very, very unfair. But that's exactly what they've done. And they have moved what was traditionally to be taxed at 18%, or in some cases not taxed at all. That's being moved to 28%. And that's what is really hitting the online gaming industry very badly.
Okay. And what is the legal recourse these companies have? Some of these gaming companies, as you pointed out, are definitely knocking, various high court doors. Delta Corp, for that matter, has gone to Sikkim High Court. There is a stay on GST notices there. Bombay High Court has also given relief to Delta Corp. There was an impact on stock thereafter. We'll discuss that with Suyash. But, do these companies have a legal recourse where they can all come together and all petition the court together, or will they have to move individually from here on?
Absolutely, they can go together. You, of course, have the Online Gaming Association, who can act on behalf of all the companies who are part of the association. Or alternatively, what they would normally do in such circumstances, because a tax is levied on a single person or a single company, that company will file a petition at the High Court, and then they will bundle up petitions, a bunch of petitions which are based on the same issue. The High Court will bundle them up, and then they will, issue an overall decision for all of them. So giving a stay, it may have to be, given by each company individually. Okay. But giving a decision by the High Court will likely be done as a bundle for.
But in that case, Abhishek, they'll be literally challenging the GST authority. And I don't think a lot of these gaming companies, some of which we've spoken to and the representation that has come to us, they don't want to go against a government decision. It will not be seen as a very good move. And especially when the government seems very adamant and so far, all commentary that is coming from the government, including GST officials, is that it is important to levy a higher tax on gaming platforms. 28% is what deems fit. You cannot be charging a household consumable item at the same rate as, let's say, gambling or casino or horse racing, which seems a fair enough argument. Where does this 28% reverse or retrospective implementation come from? Although the government is not saying it's 28% retrospective implementation, it has always been 28% retrospective, or 28% rather, tax rate, which perhaps these companies knew of but did not adhere to.
Yeah, I think the confusion arises from a very technical thing, which is the definition, where you have online gaming, betting, etc. Now, online gaming per se does not mean betting. You know, I could play a game where I'm playing based on my talent, how good I am at playing online, how good I am at playing a certain game of, skill. And if I win that game of skill, then it's not because of chance, it's because of my ability. And in that case, if you want to put it at the same bracket as, let's say, a person who's betting on a chance, if India wins tomorrow, so much. Or, if this horse wins the race, then I'll get so much. Now, that is a game of chance. There's absolutely no skill involved there. But you're bracketing both at the same tax rate, which seems slightly unfair. Now, that even assuming that you still want to tax it at 28%, I think the issue arises where the government says you have to pay 28% right from the inception, which is, from 6 months ago, whatever you collected, you need to pay 28% on that. Where do I go to collect the money? That person who paid me 6 months back is not going to come and say, oh, I paid you 10% less. Okay, you take this 10%. Nobody is going to do that. That's not practically possible. So there's a practical situation here where there's a timing difference. There's going to be a collection shortfall, yet the tax demanded is on the full amount, which is going to be impossible for companies to pay. So that is where the issue is actually arising.
All right, it looks like online gaming companies are caught between a rock and a hard place. Not much of a legal recourse there apart from individually seeking reprieve, which is what many of them are doing. Abhishek, always a pleasure. Thank you very much for taking time out. Thank you for joining us here on News 9.
Thank you very much.
Moving on now, every time you go to shop at a retail store and wonder if you should pay for that carry bag or not, you're not alone. As eco-friendly carry bags like paper and jute became fashionable, shopkeepers and corporations started minting profit by charging for the same. Now, consumers have to pay extra charges for a carry bag despite making a significant purchase from the store. But what does the law say? In several rulings, court has noted that it is the primary responsibility of the seller to ensure that the goods are given to a buyer in a deliverable state and all expenses are to be borne by the seller itself. In a recent case too, Ikea has been fined to the tune of 3,000 rupees for charging a 20 rupee from a customer for a carry bag. The customer later went to court and the court ruled in their favor. To discuss what the implication of this ruling will be, and several such rulings that have come in the past, Udisha Srivastava joining us here in the studio. My colleague Udisha finally out in front of the camera. Udisha, good afternoon. Let's quickly understand by what's happening here. We know that there is a case and there have been similar rulings in the past where court has, and consumer court specifically, has ruled in favor of consumers and reinstated that you don't have to pay for a carry bag as long as it has the logo, because then you are the ambassador for that brand.
That's true. So this case, Ikea case, is very interesting on 2 points. First, the ruling that has come out from the Bengaluru court, and number two, if we consider the consumer awareness factor here. So the Bengaluru court has said that the Ikea company, the retailer, will pay 3,000 rupees, and out of these 3,000, 2,000 is for the litigation that the woman named Sangeeta Bora has paid. 1,000 is for the mental harassment that the company has caused to the customer. Plus, they will also pay refund for the back cost. So the ruling, if we divide the cost, it's very interesting because the court has taken into account the harassment and everything that the consumer goes through, the litigation expenses in filing such cases, and of course the 20 rupee back cost also has to be paid by IKEA to the woman. Now if we talk about the consumer point of view here, the consumer awareness point of view, then we see that a lot of people do not know that they can actually deny that I won't pay for it, or they just assume that okay, if this is the bill and if 20 rupees is added, sometimes for some people it's just okay that you pay 20 plus extra money. But ideally, if a logo is imprinted on a bag, and this bag could be a jute bag or a plastic bag or a paper bag, if the logo of the company is imprinted, you cannot charge the consumer for it.
Okay.
So this woman, she wrote a letter to IKEA, sent a legal notice, but they denied that there is that they're doing nothing wrong in charging rupees 20. But now the court ruling comes out and they have to pay back these 20 rupees.
All right,
Yes.
and this is not the first case. I'll ask my producers to play up, previous cases as well, which have come in favor of consumers. So here's what we know and what every person watching out there should know. Number one, you should not have to pay for a bag as long as it has a logo of the company or of the retail store that you're buying item from. Number two, every time you are billed, you should be asked whether you want that bag. Number three, in no case should a seller just hand over the material to you. They should be handing it over in a way that it's easy for you to transport it, so they can't essentially charge for a minimal paper bag that they provide to you.
That's correct.
All right, so remember, these are the judgments that have come in favor on 22nd of November, I'm assuming last year. Consumer courts, let's start from the beginning. Consumer courts have in fact fined Reliance Trends to pay 3,000 rupees in September this year, or in 23rd of January this year. 24/7 in Chandigarh was slapped with a 26,000 fine in a similar matter. Let's move forward. On 22nd of November, Odisha, a consumer court asked shopping mall to pay 25,000 rupees for asking a consumer to pay up for a carry bag. The DMart Hyderabad store, one of the DMart Hyderabad stores, also paid 1,500 rupees in penalty for charging for a carry bag in May, I'm assuming May of this year. So all of those judgments have in fact come in favor of people. So if you are made to pay for that carry bag, it is in fact your right to deny that payment and ask the retail store to give you that bag free of cost. And more importantly, if you are made to pay up, you can challenge that particular demand in a court of law. It is most likely to come in your favor. But shifting focus now to another story that we're tracking coming in from Bombay. Property registrations in Mumbai increased by 37% this festive season compared to 2022. The 9 days of Navratri saw a significant surge in property registrations as the city embraced this auspicious period for high-value commitments, according to a Knight and Frank report. Now, Mumbai city reported 4,594 units registered during the 9 days of Navratri, which is from 15th of October to 23rd of October of 2023, resulting in a 37.4% year-on-year jump compared to last year. This marks an increase from 3,343 units registered during Navratri last year. All this data coming to light, all thanks to Knight and Frank. Disha, we keep talking about how costly properties become, but it doesn't look like that has in any way impeded people's ability. It has not impeded people's ability to buy more. They're buying more and buying high value items and high value commitments like property.
Exactly, we're talking about high value commitments here, and it is also because the festive season has provided sort of an impetus for people to actually go on and make these investments. So if we talk about this period from 15th of October and from this date Navratri started, so in these 9 days, in these 9 days, the property registrations in Mumbai was something around 4,500 plus. And compared to this, and compared to the Navratri period last year, which started in somewhere around 26 September last year, the property registrations were in the numbers of 3,300 something. So now the shoot can be seen 3,300, and now this time it's close to 4,600, if we can say that. And if we talk about the average registration rate, last year during the Navratri times, it was 371. That was the average registration rate. And if we talk about this year, it is actually 510 that's on the screen.
All right.
Yeah.
So those are interesting numbers. Suyash, it's pointing to a trend line here. It's an interesting trend line, which is India's consumption story and more money in hands of people. You know, just this morning we were discussing the takeaways of the S&P Global report, which says India is going to become a $7 trillion economy, $7.5 trillion economy by the turn of the decade, all thanks to the ability of Indians to spend and to consume. That is also playing up in a big way.
That's true, Shweta, and also we are in a high interest rate regime, so the kind of demand, it really is surprising. I mean, I was also reading an ANAROC report. In the entire Q2, housing demand went up by about 36%. And another thing that kind of stood out for me was that premium housing segment saw good a jump of about 5.4% in demand in the previous quarter. Also, being a markets guy, I've been tracking Nifty Realty very closely. Nifty Realty scaled an all-time high level, a 16-year high very recently, and it's one of the outperformers, in this calendar year. In fact, in 2023, Nifty Realty is up about 40% or so, and many of the builders that are focused on residential properties, such as your DLF, such as your Sobha properties, have given good returns. So not only are there's a demand for housing and affordable housing as well as premium housing, but it's also turning out into a guidance for these companies, because we are seeing the kind of run-up that we are seeing in stock prices, 30 to 40% in a matter of a few months.
All right, so this wasn't just the festive times. It's an overall trend line that you can notice at this point, which is, this year, in fact, has been better than the last year. As COVID pangs seem to be going behind us, we are spending more and more on high-value commitments. Important to point out, this is property. This is more than just buying a two-wheeler or a four-wheeler. The money, the ticket size here is much bigger, which is what Udisha was also pointing to.
Yes, so while we focus on in the Mumbai, then in the first 10 months, which is still October, the property registrations have crossed the 1 lakh mark. So while we talk about high interest rate, this number is also very interesting, that property registrations are, they are existing. And because the festive season has kicked in, there's Navratri, the Shara and the Diwali is round the corner, then we might see a jump in these numbers also. All
right, very interesting times that we're living in. Despite a very high interest regime, it appears that people are in fact purchasing high-end value products like property, four-wheelers, two-wheelers. Consumption remains at an all-time high. In fact, my colleague Suyash pointing to a trend line here as far as Nifty Realty is concerned, scaling also 20 to 30% in the past couple of quarters, reflecting a sentiment which is positive towards real estate. Always has been positive towards real estate in India, but more likely an after impact of the COVID hangover, which seems to be over now. So realty there, one of the big, I think, go-to places for a lot of Indians after gold. Of everything but after gold. But I think with that, we've run out of time on this show. Thank you very much for all those who have tuned in. Thank you for watching.
इंजीनियरिंग कर रहे हैं, जो कि सभी लोग कर रहे हैं।